Happy Monday, everybody. It's Nick Groves here with Trading Analytics, and I just want to give an update on what we might be seeing this week, what happened last week, and where we might be going from here. So let's start off with talking about Friday. Friday, we came in with around, I think, 170,000 jobs versus the 243,000 jobs expected, and the market rallied. Why would the market rally when jobs are falling? Well, it's because of the Fed. Weaker economy, more likely to cut rates, which should, in theory, boost the economy. Wouldn't hurt inflation at all. But that's why we saw this pop. Now, is that data actually good? I don't think so. And we also saw pretty darn weak ISM. Now, that might spook some investors, and this rally might get sold. But the question is where, because it gets a little bit tougher the further up we squeeze. Do note that the S&P futures resistance is at 51.93. But looking at the cash, we're actually above that 618 now, and we could be on a straight beeline up towards 5200, 5210. Now, that's a tough short position to hold if you're getting in today or Friday, perhaps. I did get in on Friday, and I am looking to add somewhere up around here, around 5200 in the ES. But just be careful if you're taking on something like this, because the market, especially on the bull side, can get pretty squeezy if it wants to. So just do be careful. As far as the Dow goes, it also broke out of this triangle resistance here at 38,460. It's sitting around the 50% retracement. We're going to have to see how it reacts. And the Dow Jones Transportation is also very similarly getting close up to this 50% retracement at 15,530. One thing that I'm taking a pretty tough look at this week and going to stay on top of is the US 10-year. Do note that we do have the 10-year note auction on Wednesday. I'm going to be watching that. We also have crude oil inventories on that day. We don't have a whole lot of data this week. Later on in the week, we have initial jobless claims, and we do have some Fed speakers, but the relatively low data this week. So it's going to be potentially a trend week. So I'm not too sure if the trend's higher or lower right now, because it felt like the bears had control of this equity market. They might be losing some of that right now. So that's why I keep emphasizing being careful. But do note that yields are still in this ascending channel, and support's going to be at 4.4. Now, if the S&P squeezes up towards 5,200, and this is sitting at support somewhere between 4.375 and 4.4, I might be more enticed to actually add to that short position. And I know I just mentioned yields, but we also saw that we have some crude oil inventories this week. I just want to point out that the crude did come down and tag channel support pretty perfectly. And this bear flag is also, looks like it got pretty darn close to completing. Not fully though, but it's close enough for comfort. So it looks like oil could actually get some get underneath this and push up higher again potentially. As far as big tech goes, Apple came up right near resistance on Friday, and it tagged it perfectly. It came up also to the 618 at 186, and it looks like it's reversing a bit lower. The earnings, in my opinion, were pretty, well, they weren't much to write home about. That being said, they had some great buybacks. What are they going to do with those buybacks? It's hard to tell, but it just the company is not all that exciting right now, and it's been in a pretty bearish trend. Finally saw a pop. Will investors use this as a way to get out? I'm not too sure, but I would be looking at around 177 or so to see if we see some demand again. You know, similarly to Tesla, because Apple was in this falling wedge, Tesla was also in a falling wedge, and they both popped up. Tesla didn't fully fill its gap, but it pulled back to 176, and it looks like it could actually roll higher. One thing that and I would imagine Apple could do the same, you know, if it gets back near 177 or so, maybe not entirely fill the gap and maybe roll back higher. But one thing that is rolling higher is NVIDIA. NVIDIA's up 3% today, getting close to that 786 at 922. It broke out of this triangle, and it doesn't look like it's turning back. But when you look left, you can see that there was some resistance. I know that that NVIDIA was in a bit of a range for a while there, just sitting really in this. So will we see some resistance here? I imagine that's possible here around 920. So just keep an eye on that level, add an alert. As far as some of the other big tech, Google, it's still consolidating after that giant pop. I'm just watching 162, and really 170 to see what direction it wants to take from there. But I'm just overall being patient. I'm also looking at the semiconductor index, the SOX. I'm trying to see if it gets above these highs, will it stretch up to the 48.60 level? I think that's entirely possible. Semis have been quite strong this year. I think that we're seeing it in NVIDIA, AMD up 3%. So I'm always watching the semis. They're just such a big driver. And one thing that I've also been taking a look at, and I'll leave you guys with this, is the TAN. This is the solar ETF. Now, I'm not a huge solar investor, but I have noticed that we're at some low levels not seen since 2020, and well, obviously we've been in it since October 2023 or so, just drifting down here. But this wedge looks like it could be close to breaking out. If we can get a daily close above 43.60, I actually kind of like this setup. I think risk is well defined at the lows at 39. And also energy's been doing quite well lately. When you take a look at things like the XLE, it did break out at one point to levels not seen since 2014 earlier this year. And I'll just try and scroll back here to let TradingView load up for me if it would do that so kindly. Yeah, back in September of 2014. And when it pulled back, it came back to the 38.2. Now, the rest of the market, the S&P, the NASDAQ, the Dow, they fell from their highs to about, roughly the 50% of the 618 retracement. This one looks strong. It's also a defensive sector. So potentially, if energy is going to, follow suit here, we could see a rally here in the TAN. So that's one thing I'm looking at, but I will continue to update you guys throughout the week here at Trading Analytics. This Twitter handle right here, Trading Analytics with an X. We're constantly posting charts and keeping you up to date. So more than happy to help, and I will see you guys there. Thanks so much.